All right, it's the 11th of March. It's a Tuesday, and we got about 30 minutes to the NY Open. We'll get to the charts in a second. Yeah, we're good. All good, I think. Sound is good. Yeah. All right, so let's start with the calendar, as usual. So there is news in about 2.5 hours from now. So not really important, and this is not it's not an important news event. I have no idea why it's a red folder, but it's not an important news event. It'll just add volume to the direction price is already heading by that time. So whatever direction price is heading at that time, it'll just add more volume to that current direction, right? The big one is tomorrow, CPI, that's the big one. And then we have PPI on Thursday, and this too is not that important. These unimportant news events basically just add volume to the current direction of price, right? Now, I won't be streaming tomorrow and for the rest of the week and on Monday, right? I'll be back on the 18th. I'll stream on the 18th. I'm just taking some time off this week and the weekend, so I'll be back on the 18th, and by the grace of God, I'll be streaming on the 18th. So okay, so there is basically like yesterday, not much, no news, right? Okay, so let's take a look at the chart. Let's see what happened on the daily. Now, on the weekly, an upper time frame, uh, price closed bullish above 2900 and above 2882. There is a weekly wick that needs to be filled. Price should be pushing up on the weekly time frame, right? As I've said, when we look at these time frames, we look at them individually. What information they give, they tell us individually, right? So when we look at the weekly time frame, what does it tell us? With the candles that we see, we have a bullish close above 2900 and above 2882, and we have a wick, right, that has tapped 2929. So that wick is very likely going to get filled, right, and head back to 29. That's about 170 pips from now. When we go down to the daily, we have more candles, so we'll have more information. On the daily, we had price push down past 2900 because it had tapped 200 several times, right? On the daily, it looks like it's tapped it 3 times here the last 3 days. So the volume there, obviously at 2900, the liquidity was probably taken out. So price needed more liquidity to head up, and that's exactly what it did. It pushed down to 2882, grabbed liquidity, and now it's pushing up, right? So now we're very likely heading to 2929, very likely, right? That's where we're heading to. That's about 145, 150 pips away. Okay, that's probably the trade that we want to catch today, heading up to 29.29. Yeah, and then we're bullish. We've just been ranging for about 3 or 4 days, but now the price has grabbed liquidity. We should be pushing up, right? Yeah, let's go to our trading chart. Okay, so before we draw the zones, let's do a quick recap of what happened yesterday. Price ranged yesterday. Now, if you listen to the last 5 minutes of the stream, I tried to give out a trade idea, and there was one trade idea that I gave out, and that was sells. There was nothing else. I did not give any buy ideas. I gave out only sell ideas, right? And I said wait for 30-minute resistance to form, a tradable 30-minute candle, not a doji. Wait for a tradable 30-minute candle to close. The doji can form resistance, but you can't take a trade off that candle if it's a doji, and that's exactly what this candle did, right? This is a doji. You can't take a trade off that candle. You got to wait for this candle to close because that's a doji, right? There is no body in that candle, just wick on either side. So you got to wait for the 30-minute candle to close, and it tapped the EMA, closed below, perfect tradable candle. After this candle closes, you have to look at the 15-minute time frame, or you can trade the 30-minute. You have to wait for the pullback and then take the trade down. And where did I say we were heading to? The minimum would be this, right? The next liquidity candle. Why? Because this has been tapped 6 times. I said once it comes down, it'll be the 6th time it's coming to that area, because it's tapped it 5 times in the past. That's 1, 2, 3, 4, 5, and then this is the 6th time it came in, right? So once it's tapped that many times, there is no liquidity left. We have come deep into the zone, into that liquidity candle. It's going to the next one, right? That's the purpose of these zones, because you know where price is heading to next. And if there is not enough liquidity in that, it'll go to the next liquidity level, which is what? 2882, which is a weekly SR level, right? And it grabs liquidity from that, and then it goes in the opposite direction. Very simple. That's all that price does every day, right? Okay, let's get rid of all of these and start this process again. Okay. Just give me a second. All right, let's start. We have a demand zone here, a rally, 3 basin candles and a rally. Price has come deep into it, right? And has reacted and created another demand here. That's the source. This is the reaction. It's created new demand, new 4-hour demand as a reaction to this source, okay? So I'm going to combine them like that. So that's a drop, 2 basin candles, and the rally, the leg out, okay? Leg in, 2 basin candles, leg out. I'll just combine them with this because we haven't broken below this low, and I don't want to draw 2 zones there. So the close there is 90.62. That's 4-hour demand. Now again, when price goes across a BRN or a weekly SR level, I call these psychological round numbers or big round numbers, BRNs. If it goes through them on the 4-hour, we have to go down to the lower time frame and take a look at that area. We have to, right? Because price generally does create zones at those important levels. Just like it's created a 4-hour demand zone right at this weekly SR level, we have to look at the lower time frame here, right? And as we can see, you can see a zone there. There's a rally base rally on the 1-hour. There's also rally, 3 basin candles and a rally. So we have to mark that out. Okay, that's the first one. And that's the second one. Okay, I'm going to keep them as 2, but I'm going to bring this down so it doesn't overlap it. So let's put the numbers there, 237, 752, 237, 752. So 275. Okay, so we got 4-hour demand here. Yeah, we got 4-hour demand here, and we got 1-hour demand here. Okay. Right. Those are demand levels that we should be pushing up. I don't think we're going to come down again another 300 pips. We should be pushing up today because we've grabbed liquidity. We're going to talk about this. We're going to talk about the liquidity grab a little later. I'll come back to that. Yeah, I'll come back to that. Okay. We've crossed not yet. Okay, so we've got a rally, 3 basin candles, and a drop here. So we haven't broken through that zone yet. So I'm going to extend it to the right. That's a 4-hour zone. That's a rally, 3 basin candles. The reason this is the start of the start of the base is because this candle has more collective wick than it has body. So does this, and so does this, right? So that's the base, and that's the drop. You can see a sudden drop started right here. That's the drop. Okay. Let's extend this to the right as well. We should be pushing up, but not too far because there is no news today. So I don't think we're going to head, but we will extend this one as well, and that should be good, right? That covers about 300 pips to the upside, and we got about 300, roughly about 325, 330 pips to the downside covered with those zones. Okay, I'm going to move all these labels across. Now this one, let's have a look at this and see if it's high. Like if it's a 84 pip zone, we've come 54 pips into it, so I'm going to remove the label, right? That's pretty simple. Once a price comes 50% of the way or more into a zone, then it's no longer a high liquidity zone, right? Let's extend the candle as well. We're going to take a look at that liquidity candle, the most recent one, the one closest to current price. We're going to take a look at that one again. Okay, right. I'm going to delete, oops. I'm going to delete this for now. We're going to take a look at that zone again, right? That's what I usually do. When price is in a current zone, we're going to relook at that liquidity candle. Okay, so we have 3 new zones that we've drawn, right? There's a new zone that's formed here on the 4 hours and 2 new 1-hour demand zones. Okay, let's clean this. Let's now check if the next step. Sorry. To bring this label across because that's a new zone there, right? So it's a high liquidity zone. We will talk about that. Just keep that label outside. Okay, let's start from demand. Let's start with this zone down here. That's the new zone that we have. Has this taken out supply on the way up? Let's look at the 30-minute time frame. I think it's clearer. Yes, this move up here took out this. So there is a drop here. There is a base there, right? And then price has pushed up and taken out all those wicks, right? You can see this move up took out all those wicks. So there is some sort of supply there as a drop and a base and a drop, or a rally, a base and a drop, and that supply that looks like anything that looks like supply is supply, and that supply has been taken out by this move up. So that's a high liquidity zone. Let's go back to the 1 hour. Has this taken out anything to the left? I think the 30-minute will be clear. Yes, it has. There is a rally, a base, and a drop here. And this move up, you can see this candle here has taken out this supply to the left. So that too is a high liquidity candle, a high liquidity zone. And then this zone here has taken out this supply. That's pretty obvious. You have a rally, a base, and a drop. And this move up has taken out that. So that too is a high liquidity zone. And also we have 2900 running right through it. Okay. Now keep in mind the EMAs have crossed, right? Just like I did yesterday, just like I mentioned yesterday, the EMAs had crossed just prior to the pre-NY session, just before actually the London session. So I said we should be heading down, and that's exactly what happened. Price did push down, And if you got in here, this was the 15-minute candle. This was the close of the 30-minute candle. Yeah, if you got in on this candle, waited for the pullback, got in on that candle, it's a good 200 plus 200 pip move down. So keep in mind the EMAs have crossed. What I would want to see is a pullback, some sort of support to form, and then for price to go and retest the current high and head higher, head further. Okay, but we're going to talk about that later. Let's not get ahead of ourselves. Okay, so so there is this supply zone is no longer a high liquidity zone, but there is one above. There's a high liquidity zone just above. Okay, there is that. Yeah. Okay. Now, price is inside supply. Right, we've got about 15 minutes to the NY open. Just a second. Yeah, we've got about 14 minutes to the NY open. Okay, next is we're going to look for the liquidity candle in here and see how deep price has come into it. Okay, let's start with the 1 hour. There is that, which is 69 pips. This is outside the zone. It's 100 plus pips. Let's go down to the 30-minute. There isn't liquidity in this zone. Yeah, there isn't liquidity in this zone. It's about 50 pips. It's 42. It's this candle, and there isn't liquidity. Prices is going to go right through it, probably right now. It's going to go right through it. I'm going to mark it anyway, but we're going to be heading right through it. $40. 42. Yeah, this one right here. 635, 142, 635. Yeah, we're going to go through that. We're going to come to this one, the next one. We're almost there, because that's the liquidity candle of the zone. But look how deep price has come into it, right? And then it went down, came back deep again, went down almost, but didn't touch, and then here. So yeah, this was yesterday's London session. Yeah. It's 45. It's 39. It's 42. It's 43. Yeah, it's this one. Yeah, we're going right through that. Okay. Now, so we have, once price breaks this, we know where it's going. It's heading to this. Very likely heading to 29.29. So before it gets there, I want a pullback to be able to get in on buys, right? Keep in mind, EMAs have crossed and prices above the EMAs. I want a bit of a pullback. You might not get a deep pullback. You might get because price is having a lot of volume. We're going to talk about the liquidity grab in a bit. Let's look at the demand zones and see where the liquidity candles for them are. Okay. Here, this zone, 2900 is a liquidity level, obviously. But is there a liquidity candle in here? On the 30-minute, it's this candle right here that takes up the entire zone. That's 53 pips. 278, 745. $45. Yeah, bring it there. 198. Perfect. Okay. The one below is this candle here. That's a 45 pip candle. 58. 43. Yeah. This one right here. Just bring it down so it doesn't overlap. This low is 745. This low is 320. Okay, that's better. Right, so there's a liquidity candle here. So there are two liquidity levels. There's a liquidity candle here, and a BRN here, and there's another liquidity candle here, right? So, and the EMA is here. There's a lot of potential liquidity here for price to grab and push up if it does come down. I don't know if it will come this far down. It's about over 100 pips down. Let's look at the zone below very quickly, because now we have new 4-hour demand, which is a reaction, but nevertheless it's a high liquidity zone, and that's 4-hour demand. So right, that's a liquidity grab, right? That wick right there. We're going to talk about this right now. So I've said this many times. When price needs to make a big push up, it needs to grab liquidity, right? Now you see it does something like this. That means that's a lot of liquidity on a high time frame for price to push up. And this could be sufficient for price to push all the way above 2950 towards 3000. This could be sufficient, this wick here, right? A liquidity grab from 2834 to push all the way down, up. Price can always come down, it can do whatever it wants to do, but this could be sufficient for price to head at least to 2950 again, right? Now to do that, once it does a liquidity grab on the higher time frame, it'll continue to do smaller liquidity grabs on smaller time frames to head to these targets, to head to other liquidity areas like 2929 or 2950, so on and so forth. So that's what happened here yesterday, right? Actually, sorry, in the Asian session today. This is a liquidity grab from 2882 to push towards 2929. Okay, it's on the 1-hour time frame. It's also visible on the 4-hour and on the 30-minute. Perfect, perfect. On the 30-minute, it's perfect. 72 pip wick. Look at the size of the candle, the body, and look at the size of the wick. So that's the liquidity grab for price to push towards 29.29. Now it happened during the Asian session, so we should see a pullback in the New York session, and then probably 30-minute support to be formed, support created, and price to go back up. Right? That's the trade I'm looking for today. Okay, let's get back to this. So that's a liquidity grab on the 72 pips. This candle is 99 pips. That's over 100. Let's go down to the 15. 45. 79. Maybe the 5. 50. 41. 43. It's not that. Oh no. It's not the 30. It's not the 1. It's 50. 77. Yeah, it's got to be this one. That's the candle. Just going to bring it to this 5-minute candle. Yeah, that bull candle right there. So once you break this low, coming down here. Okay, 872355. 72355. Okay, that's part of that wick. It's part of that wick. That's fine. Just give me a second. Okay. Now, I explained what this was. On the lower time frame, this is a liquidity grab for price to push to 29.29. Okay. This liquidity candle is not going to hold. It's not going to hold for today. It might hold now and push price down to grab liquidity head higher, but it's not going to. It's un, it's very likely that it's not going to hold, right? It's very likely uh, that it's not going to hold. Its price is going to break through this pretty easily because we've had price it created it here, pushed down, tapped it once, twice, third time, right? And it's come deep into it, so we're heading up here. Now I want to get in on those buys. There might be a sell setup, but there not might be. There very likely will be a sell setup. There will be a sell setup, but I'm going to try my best not to take those sells, and I'm going to wait for those buys. And the buys might come in much later, though. It might come in an hour and a half from now, towards the NYSE Open, probably, or after the NYSE Open. But yeah, an hour and a half will be the NYSE Open. It'll probably come in then. We'll have to patiently wait. It might happen outside the stream. Let's take a look at it then. But for now, I want to take buys. Price to pull back, create support, and then push up. Okay, so yeah. Okay, just give me. I'll be back in a couple of minutes, and then we're going to take a look at what price did during the Asian and London sessions. Right? We are going to wait for the first 15-minute candle to close. I always wait for the first 15-minute candle of the NY after the NY open to close before I look to do anything. So we've got about 15 minutes more, right? About 13 and a half minutes more. I'll be back in about 2-3 minutes. Okay, let's take a look at what price has done in the Asian and London sessions. We've had a lot of movement in the Asian session. Okay, that's the market open right there. Let me just zoom in. Yeah, right here. So the market opened at around 2,888.5, right? 2,888.5. We came down, pushed up. This is obviously the Asian low. That's the Asian high. There's the London low. That's the London high. Yeah. In the Asian session, we moved 200 pips, and in the London session also we moved roughly about 200 pips, right? So there's been a lot of volume in the Asian and London session. That's all due to this liquidity grab from 2882 weekly support level. This candle right here, 30-minute candle, that's a liquidity grab. Okay, so let's take a look at what price has actually done. Okay, so the market opened here. Price was bearish in the previous session, which is the NY session, but there was a liquidity candle here, if you remember, right? Price had grabbed liquidity from that and also grabbed liquidity from the weekly SR level. So we opened, came back to the weekly SR level, we grabbed liquidity, we created the Asian low, and that's a lot of volume, and price is able to push straight up 200 pips without any pullback, right? That tells you how much of liquidity was there and how much liquidity price grabbed. It pushed up 200 pips without a retracement. Pushed 200 pips and tapped 2900, which is also liquidity area. Pushed down straight away, right? Pushed down, created the London low, went back up to 2900 because we still have a lot of bullish volume from here. Pushed back up to 2900 and to the Asian high, closed above it, closed immediately below it, and then, but in the London session you couldn't have taken a trade there even though we closed below because it's at 2900, right? That's right in front of it, so you can't take a trade there, right? If you were trading the London session. And then range, then again closed above the Asian high, sat above it, came, tapped the Asian high with this wick here, pushed all the way up, created the London high. That's when we tapped the liquidity candle, and now we've come deep into the liquidity candle. The reason we've come deep into the liquidity candle is all because of this liquidity grab, right? So we've made a 350 pip move today, right? 350 pip move today, all because of a very large liquidity grab from that liquidity candle that we had marked out yesterday and the weekly support level, right? And we pushed 350 pips up. We are here, we are ranging right now, but we should break this high pretty easily. Okay, that's the story. Now, what could possibly happen? Let's see. Now let's try to align everything all the information that we have and make a calculated guess on what could possibly happen. We formed 30-minute resistance here. That's a doji, but that's a 30-minute resistance. It's not a tradable candle, but that's 30-minute resistance form right there. Okay, that's weak, a very weak bearish candle basically. We could push down, we could close below the London high. If we close below the London high, it will be very tempting to take sells to come down, but those sells are going to be short-lived, right? So I'm not going to take any sells. Even if you have a close below, yeah, even if you have a close below the London high, a 30-minute close below or a 15-minute close below, because now that we've formed 30-minute resistance, it's enough to have just a 15-minute close below the London high to push down. I'm not going to take those sells. They'll be very tempting to take, but I'm not going to take them because the EMAs have crossed and I want to look for the buys, right? The market is pushing up. You want to be on the right side of the market most of the time. You can't do it. It's impossible to do it always, all the time. But to the best of your ability, you want to be on the right side of the market most of the time. So I'm going to wait for buys to set up, right? And that means I'm going to have to wait. I'm going to wait for 30-minute support to form. Very simple. Pullback, 30-minute support form, either from the EMAs or from a liquidity candle. A tradable 30-minute candle, not a doji. A doji can form support, but I'll have to wait for a tradable candle to close, right? Or you can have a tradable candle, a tradable 30-minute bullish candle that closes forming support. That's possible too. And wait for that and then take the trade up, right? Now, we are very bullish, so we might not have a, a, a big pullback. We're very bullish. Price doesn't need to pull back a lot. Remember this, keep in mind what's happened here, right? Because of this, we have a 350 pip move up. So price is very bullish right now. We're trending as a strong uptrend. It doesn't need to pull back too much. It can, but it doesn't need to. So I'm going to wait for those buys, I'm going to wait for the buys to set up, right? I'm going to wait for the buys to set up. That's what it is. Even if I see sells, I'm not going to take it. And I've explained why. I've explained why, right? I've explained why I'm not going to take buys. Even if I see everything line up, I'm not going to take any sells. I'm going to wait for the buys, right? We've tapped this candle. This is the 15-minute time frame. We created the candle. We created the candle here on the 30. Came down. 1, 2. It's come deep in 3 times. We're going to break this pretty easily. So I want to take the buys to go up. That'll very likely ensure just having that bias, because of what I've explained, there's a higher probability that I'll be on the right side of the market. A higher probability, right? Even if I have a 30-minute close below the London high, a rejection, the push down can be short-lived and price can easily push back up. So I'm going to wait for the buys. It might take a while. It might take maybe an hour or even longer. Yeah. Got any questions with anything that with regards to anything that I've shared? Please drop a question in the chat, and I'll try to answer. Right now, we're just waiting. Yeah, it seems like we're pushing down. Hmm. Yeah, tomorrow is CPI, so it's always better, and you got to take this into account. Asian session has moved 200 pips. The London session has moved almost 200 pips. A lot of volume has come in. Today, the daily candle is already 350 pips. And if we are anticipating a big daily candle tomorrow due to CPI, then around 350 pips might be today's daily candle. So which means the move has already happened. So it's best to uh, patiently wait and try to be on the correct side of the market today, right? Because there is CPI tomorrow. So I'm going to wait for those buys. If we break this high, it'll be great. If we break this high and then pull back, that'll be fantastic. Then we know, then we have more profit potential because we know where price is heading to next. It's heading here to 2970 to 2918. That's where we're heading to 2918. So if we break this high and then pull back, that'll be even better. It's coming down. 30-minute resistance form, price is coming down. 12 minutes more for the 15-minute candle to close. No top wick on this candle. It's pushing down. Okay, where would you mark? I've got a question here about the London low that I've marked, which is here. Uh, where would you mark it? Because what I do is I look for a swing low or a swing high, right? Within those session hours, ideally towards the open of the session. So if it's this Asian session, then ideally within the first three hours or even 4 hours of the Asian session is where I look for it. But sometimes you don't get the swing lows or swing highs um, in the first 2 to 3 hours. Sometimes the volume comes in the latter half of that session. You got to remember, a session is basically roughly 8 hours, right? Because that's your work day, right? So if you're London, whenever the London Open is, um, it's 8 hours from there, right? So that swing high or low can happen anytime within those 8 hours. Now, you also have to remember with the London Open, prior to the London Open is the European Open, the Frankfurt Open. You got to take that into account as well, right? So they both uh, are you got to you can very broadly consider them as one, the Frankfurt Open and the London Open. So the Frankfurt Open or the European Open happens an hour before the London Open, right? So um, let's see, 1 second. I think it opens around maybe here, the Frankfurt Open, maybe 8 a.m. IC market server time, I think, roughly. I don't know, right? But you got to consider um, that hour before, right? And sometimes you can be you might have to look plus minus 15 minutes also, right? Because uh, volume can come in 15 minutes before a session open or 30 minutes before. Like we have the pre-NY session. The pre-NY session is considered, uh, or the pre-NY, yeah, you can say the pre-NY session is considered the pre-NY session because there's volume that comes in consistently. We've seen over the last however many years that volume has come in an hour before the NY open, and that is the whole. That is why that pre-NY the label is created, because volume consistently, maybe not every day, but on a if you look at a longer period, we've seen some sort of consistency in terms of volume coming in an hour before the NY Open, right? So similarly, you have the Frankfurt Open, and you can have volume come in 15 minutes prior to that too. Okay, 1 second. 2945. 2945. 298792. Okay, let me put those. Let me put these numbers in that you've given me. 2900, 2945. I don't see a swing low here at 2945. Okay, and where is this? 298792, 2987? You mean 2887? 2887.92, I guess. I guess what you mean is 2887.92. No. I think you got these numbers wrong. 2987? 2987 is outside where price is right now, and 2887 is way down here. I'm not sure. 2887? 2887 is here. And this is, you mean this low here? This low is the Asian session. 2887 is the Asian session, but there's a low there, but there is no swing low there. 2897. 2897. This one. This is the London low. Possible. Could be. But this is a bigger swing. There's nothing wrong in this, right? There is what you're saying, 29. Let me get rid of this. Here you're talking about this swing low here. This low is 2897.5, right? 2897.5. This is what you mean. 2897.5. Okay. So there's nothing wrong in marking this as the London low. Absolutely nothing wrong. The reason I took this is because you have the Asian high. Price comes, this swing low broke this high. This is a significant, this low is more significant than this low, if that makes sense, right? This low is more significant than this low. So think about it. What are we really looking at? When we look at these, the purpose of these London highs and London lows, we're looking for a time where a lot of volume comes into the market. And that if there is a lot of volume, and if it is a lot of volume, the one way to recognize a lot of volume is not just by the move, but what it breaks or what it respects. right? So this low, this volume that came in here broke the Asian high, closed above, right? To me, that push up is significant, and that volume, this does not belong to the Asian session, obviously. It does not belong to the New York session, obviously, because the New York session is now, and the Asian session is, far behind. So where did this volume then come from? It has to be European volume or London volume, right? Because those are the sessions. You get the Asian, the Frankfurt, the London, the pre-NY, the NY, the NYSE, and the London close. These are the 7, right? I'll repeat: Asian, Frankfurt, London, pre-NY, NY, NYSE, and London close. These are the 7, right? So when you have those are the 7 that are going to bring in volume. One of those 7. So when you look at either this push up or this push up, which is the most significant one? To me, this is more significant. This is more important because this broke above the Asian high. There's nothing wrong with this. There's nothing wrong. You can argue that that's correct too. But for me personally, I feel this is more significant because this broke the Asian high, closed above, then we pulled back and continued, right? And now that this volume came in, which is a 110 pip move up, or 107, 110 pip move up, now I need to credit that move to a session, to one of those 7 sessions, right? I need to credit it to something. I can't credit it to the pre-NY because that's not happened. I can't credit it to the Asian session because that happened way back, way before. So where do I credit that move to? Where do I credit that volume to? The only place I can credit it to could be the Frankfurt session, European volume, right? Does that make sense? Yeah, so just waiting. Obviously can't take sells in here because this is still a liquidity candle. It's a liquidity candle and there is a supply zone there, right? So can't take sells in there. We can narrow this supply zone a little bit more because prices come deep into it. So let's look at the 30-minute time frame. And yeah, you can bring the supply zone up to here. This close 135. 1035. Sorry, no. 1135. And you can bring it up there because that's on the 30-minute time frame. You have a rally, a base, and a drop here, so you can bring it up there. So all I did was I narrowed down the 4-hour zone because price is now deep in it. Okay, so it's obviously not reacting to the bottom of the zone. It's coming further in to the zone. I hope what I said made sense, Philip. Um, but there's not there's nothing too wrong in the low that you suggested. This one, there's nothing wrong in it. That's fine too. You can keep it there. There's absolutely nothing wrong with it. It's just that I find this swing low here a little more significant than this one. So if you just look at it on the 15-minute time frame, always it's best when you're looking for the London high, London low, Asian high, Asian low. Look at it always on the 15-minute time frame, right? Because you can see there are more candles, you can see the swings better. So here I just feel that this is the swing. that took out the high, that took out 2900, closed above 2900, and closed above the Asian high and headed even further. That was a push-up, a volume push-up. It's a volume push-up. It's not just because when you have a 100 pip move up happen on a gold or on a chart or any instrument, right? There's a lot of volume that needs to come in to create that. Okay, and that volume has to belong to a certain session because that's when institutions open. Sometimes they place their they kind of place their orders before the session opens, just like NY Open, right? Yeah. Okay. 6:45 a.m. Germany. I agree with you. That's very early. That's very early, right? Let's say let's say 6:45 7. Let's say here, right? So what would that be? That would be 7:15, right? This low would be 7:15. Okay, so that is what 45 minutes before the European Open, before the Frankfurt Open, which is fine because we have volume coming at pre-NY. That's a whole hour before the NY Open, right? So 45 minutes before the session open is fine. 45 minutes before. Because if you consider this low instead of this low, if you take this low, then yeah, we can move it up here. 356, 356, and that would be, I assume, if this is 6:45, this would be 7:15, right? This would be 7:15 Frankfurt time, according to what you've said. If this low is 6:45, then this would be 7:15, and that's just 45 minutes before the European Open. Yeah, so yeah, you can take this low. But either way, this low or this low took out the Asian high, took out to 900, closed above, and that's over 100 pip move up. It's exactly 100 pip move up. So I consider that being a significant swing low than this one right here. There is no volume right now. Keep in mind everything that I said. There, the Asian session has moved 200 pips. The London session has moved almost 200 pips. European/London session has moved almost 200 pips. And tomorrow is CPI. And the daily candle has already crossed over 350 pips. So, and that we're bullish. We're very bullish, right? So considering all of this, best to wait for price to pull back, create 30-minute support, and then take a trade to go up, right? Keep in mind one more thing, fifth thing, the EMAs have crossed. EMAs have crossed. We're very bullish. You can see how far price is from the EMAs. We're a good 80, 90, almost 100 pips away from the EMAs, right? So we're very, this is a strong trend up, a very strong bullish trend. We're very far from the EMAs, right? So at some point, maybe very likely tomorrow, you might have price pull back below the EMAs, grab liquidity, and then push back up again. Tomorrow, not today. Okay, how long for 30-minute candle to close? 20 minutes, 15 minutes? Yeah. Okay, so I'll be back in about 3-4 minutes because there's about 9 minutes for this candle to close, 15-minute candle close, and we're going to wait for a while, right? Got plenty of time. Let's see if I'll be here. I'll try to be here until NYSE open, but in the next 30 minutes, which is 23 minutes from now, if this 30-minute candle doesn't break this high or doesn't pull back down, then you're going to have to wait longer for a setup to form, probably another hour, right? So I might not have the stream running for that long. But this 30-minute candle, this current 30-minute candle, it's got 23 minutes for the candle to close. It's got to break the high or come down. One of those things need to happen. If it doesn't, then very likely we have to wait another hour, hour and a half for a setup to form. Okay, so I'll be back in about 3-4 minutes. Okay, seems like this 30-minute candle is heading up to break this high. That'll be great if you break the high and then pull back. Then we have more. We have a large area to. We have a. We have more profit potential basically if we can break this high. This high is based off again this liquidity candle right here. Um, that's the candle. Yeah, that's the candle. Once you break above this one right here, yeah, there we go. This high, 1624. Yeah, 1624. Once you break above 1624, we're pushing up. Then we're good. Then the liquidity candle is gone. I always prefer seeing liquidity candles on the 15-minute time frame. Uh, that's my favorite, personally, my favorite time frame to look for liquidity candles or to enter trades. To enter, not for a setup. For setup, I always prefer the 30-minute time frame because it provides more confirmation. So that is why I say um, try to always wait for 30-minute support or 30-minute resistance to be created. Sometimes it's difficult. You got to have a lot more patience because you feel like price has moved away and you feel like you're missing out. But it's always better. Just yesterday was a perfect example, right? This you had 30-minute resistance created here. There was a zone here. There was a liquidity candle here. We created 30-minute resistance, and but this is not a tradable candle. This is a tradable candle, right? So wait for the candle to close, and now you can see the pullback, right? So this candle opened at 1900 IC market server time. So if you go to the 15-minute time frame now, this was the candle open. So if you look at the previous high break was this one, right? This one broke this high and this one broke this high. So you would draw the fib like this. Okay, and look at that perfect tap here, right? Was the new open of the 30-minute candle. This one right here, you can see the time 1900 IC market server time. So if you go down to the 15-minute time frame, you can see the perfect tap of 2906.5. Stop loss above there, about 40 pips, and look at the drop, 240 pips to a liquidity area, 2882, right? So patience pays, especially when trading gold. Patience pays. Patience pays when you're trading, period. But especially when you're trading gold, wait for that 30-minute confirmation. Wait for 30-minute support or resistance. Wait for that tradable candle. Don't, um, just take a trade off. You see something like this, don't try to take a trade off a candle like this. That's a doji. There's no information in this kind of dojis have no information. It formed. You can count a doji. You can consider a doji or count a doji to create support or resistance, but you can't take a trade off a doji. Yeah, we're just above, very close to the high. We should break this. Once you break the high, we're good. Yeah, once you break this, we're good. 624, 602. Yeah, just a couple of 2 pips more, and then we've broken this, and then we should be heading up here and further into this. But before that, I want to see a pullback and then to get in. Yeah, it's nothing right now. Um, yeah, there's really no volume. Look at these 15-minute candles. 15 pips, 37, 35, 30, 36. There's no volume. If your 15-minute candles, especially in the NY session, right, at a session open, and especially the NY session, if your 15-minute candles are anything below 50 pips, like if it's 45 or below 45 or below 50, that just means there is no volume. There is no volume. Volume hasn't come in yet. It's pretty simple. So they don't try to rush into a trade because there is no volume. You'll take a trade in whatever direction that you decide to take a trade. Depending on what trade plan you're using. A very simple way to judge whatever trade plan. Like there might be a trade plan that allows you to buy here. That's fine. If it works, then you can buy here. But just look at the 15-minute candles. If the 15-minute candles are 50 pips or less, like 45 pips or less, don't get into the trade. There isn't volume yet. Wait for volume price. Wait for the market to show volume, then take the pullback and get in on the trade. Wait for the pullback and get in on the trade. Wait for the market to show volume. And you'll see volume with the 15-minute time frame. On the 15-minute candle, you'll see volume coming. Wait for that. And then if you have a setup according to your trade plan, or if you trade the way that I do, if there is a setup, then wait for the pullback and take the trade. See, this yesterday was a great example, right? Look at that candle. Let's go down to the 15-minute time frame. What time was this candle? 1800 IC market serve time, right here. Look at the size of that candle. 81 pips. 80, let's say 80 pips. The next one, 80 pips. 80 pips, 80 pips. Now the market has showed you that there is volume, right? The market's very clear and showed you that there is volume now. And now use whatever system that you use, trade plan that you're using. To me, it was sells because the EMAs have crossed and price is below the EMAs. So wait for 30-minute resistance to form, which is that. Wait for a tradable 30-minute candle and then take the trade. And I showed on the 15-minute when you draw the fib where the trade was. And look at that push down, 240, 250 pips straight down. That's volume. The market has showed that there is volume is going to come in now. That's what you want to wait for. Now, does it work, 10 out of 10 times? No, it doesn't. It doesn't. It doesn't work. In trading, doesn't work like that. You don't have anything. There are no certainties in trading. So, but you can always stack the probabilities in your favor and make a calculated decision and then take a trade. And then decide if you wanted to get into a trade or not. It's 37 pips. Absolutely no volume right now. This makes no sense to take buys or sells, even if there is a setup. Just makes no sense at all. You just need to wait. Now um, tomorrow I won't be here. There won't be streams, but watch the previous NFP or CPI stream, right? Um, Even before, just go look up the date and just watch the first 30 minutes of those streams, and or just 5-10 minutes, even 10-15 minutes just before the news. You don't even have to watch the you don't have to start watching from the start of the stream. Just go to the previous CPI stream, just check the date. I'll tell I'll tell you the date now. um, yeah, it was the 12th of Feb, right? So if you go on to the 12th of Feb and watch the first, sorry, not the first, watch 10 minutes before this the CPI news, right? Uh, Basically, what I'm trying to say is you'll need to look at the 5-minute time frame, 5 or 15, right? That is for CPI and NFP, these two news events, 5-minute or 15-minute. That's the only time that I look at either the 5-minute time frame or the 15-minute time frame, right? For a setup, for a setup. So basically, when I say setup, I'm waiting for support or resistance to form, right? So either on the 5-minute or the 15-minute. But most of the time, 90% of the time, it's on the, I would say 85% of the time for CPI and NFP, because we anticipate a lot of volume. 80 to 90% of the time, it's on the 5-minute time frame. Sometimes 20% of the time, 15% of the time, it could be on the 15-minute time frame, but that's it. And that applies only to CPI and NFP. So you draw your zones, draw your high liquidity candles if you trade the way I do, and then wait for that. Again, when I say setup, it's two things, always two things. Support or resistance to form. So if it's on the 5-minute, if you're looking at the 5-minute, then you're looking for 5-minute support or 5-minute resistance to form. And a trade, and point number 2, a tradable candle. A tradable candle, not a doji. Applies to the 5-minute, applies to the 15-minute, applies to everything, right? A tradable candle. Okay. You can have a doji that creates support or resistance, but you want to wait for a tradable candle to take a trade. Yeah, so we haven't broken the high with this 30-minute candle. It's got 4 minutes more for the candle to close. We haven't broken the high. So it's very likely that we'll have to wait for at least another hour for a setup to form, at least. NYSE open is in 30 minutes, almost 30 minutes, about 34 minutes from now. And the 4-hour candle close, there's the 4. We got an hour, yeah. So we'll very likely have to wait for the 4-hour candle to close. It's very bullish. 4-hour candle is very bullish. Price has come to supply, so you might have to wait for this 4-hour candle to close, which is in an hour. Price pulls down, creates 30-minute support, and then pushes back up. It's very likely. It's not a guarantee. There are no certainties in trading, but I'm just saying this. I'm predicting this. Very likely that you will have to wait for the 4-hour candle to close. So that's in an hour from now, and that's why I said we'll have to wait for at least an hour, because this 30-minute candle hasn't broken the high. So which means this 30-minute candle is very likely going to close a bullish or bearish doji. It might close like this, might come down and close. And the next one will push. If this closes bearish like this, then the next one is going to close bearish. The next candle is going to close bearish. And then you'll have, so that's another 30 minutes, and then you'll have to wait for a 30-minute candle to close bullish for support to form. And that has to be a tradable candle to take a trade up. Yeah. If this candle closes below, you can take sells with your stop above the liquidity candle if it closes like this. This high is 535, this high is 532. It has to close below. You can take sells. Low RR sells, not high RR. But I'm going to try not to take them. But you can. But it has to close below. 30-minute candle has to reject, we form resistance and close below. This is a tradable candle. You can take sells actually. You can, if this closes below. If this closes below the London high. Needs to close below. 602229. 6.02. And needs to close below. We should be coming down here. 70, 80 pips, we should come down. Needs to close below. The next one pulls back, you can take a trade. I might. Let's see. So wait for 30-minute candle close. It needs to close strong. It has to be a tradable candle. It needs to have a little more body. If it closes like this, no. Tiny body, that means that's a doji. Yeah, no. If it closes like this, obviously not. If it closes below the London high, then there is a possibility to take sells on the pullback. There's a possibility. Only if it closes below the London high. And it didn't. So absolutely no sells. It didn't. Close the doji again. No information. Doji, no trade. Nothing. So we have a doji here, a doji here, a doji here. So we're just inside here ranging. We haven't broken to the upside or downside. This candle is, we have a little bit of volume coming in, 45 pips. Might see price push down. We'll have to wait. Have to wait. Yeah. Yeah. Okay. I'll be back in 3-4 minutes. We have to wait for the 30-minute candle to close. Got to wait for 30-minute candle to close. Or at least for the 15-minute candle to close. Let's see how far this 15-minute candle. There is volume now because this candle is 45. So there is a little bit of volume coming in. Let's see how far this 15-minute candle moves. It should push down. Should push down. Got to wait for it to close though. Yeah. Wait for it to close. Okay, so we are having that push down as expected. We didn't break the high. We're coming down. I would have considered these sells if this 30-minute candle closed below here. I would have considered the sells. But because it closed a doji, basically it's telling me that these three candles offer no information. Apart from the fact that we've created 30-minute resistance, there is no other information. And also we saw volume try to come in with a 45 pip candle. You had all of these candles were 30 pip candles, roughly a little over 30 pip candles. That was 36. This was also about 35, and then this was like some 20 something. But we started to see volume coming with this candle. That's a 45 pip candle, and I said that volume, wait for volume to come in, and that was the candles. Could have taken this, but I wouldn't have taken this trade, uh, even though price pushed down, because the 30-minute candle did not close below this. Neither did the 15-minute candle or the 30-minute candle close below the London high. Yeah, got to wait for those buys. Got to wait for those buys. Patiently wait for the buys. Don't. It's going to take time. I said it's going to take time. You'll have to wait for the 4-hour candle to close, which is about 52 minutes from now. Or you might have to wait for at least 30 minutes, because this candle is, you have to wait for this candle to close. That's for sure. 30-minute candle to close, and then wait for support to form. The next 30-minute candle to close. So it's very likely you'll have to wait for. So the close of the next 30-minute candle will be the close of the 4-hour candle. So that's probably when you might get a trade. And I'm not going to be here for that long. I'm going to end the stream in about 20 minutes. Um, I try to keep these streams to under 2 hours, hour and a half to 2 hours. But I will give out a trade idea. I will give out a trade idea. Yeah, price is pushing down. That's fine. Expected. There's no top wick on this 15-minute candle. Very likely going to break that high and continue higher. And once we break, we're coming here. In fact, we are coming. Yeah, it's a 5-minute. Can narrow this down on the 1-minute. This liquidity candle. Just saw this. No. Where did I see that candle? Pushing down. Pushing down. Should continue to push down for the next 50 minutes as well. Should continue to push down. Come into these EMAs, yeah, another 30, 40 pips. If you pull back up, can take a trade to come down. If we pull back up. 50-minute candle has closed below. If we pull back up here, we can take a trade to come down. But it won't. I don't think it will. I've broken the low. Yeah, it's coming straight down. The eye's deceiving me, man. 40 pips. It's 87. 39. 43. It's that 5-minute candle. Yeah, we've tapped this. 2907. There was no way to take sells because there was no tradable 30-minute candle. Take the sells to come down. That's fine. If this candle had closed bearish, then the pullback would have been perfect to come down 60, 70 pips and anticipating to come here about 90 pips. That would have been great if this had closed bearish, but it didn't. Close a doji, a bullish doji. This candle has to close bearish, right? So, yeah. Hmm. Interesting. Yeah, I'd be willing to take a sell up here. Price to come down here. 70 pips, but here, right around the London high. Stops above here. Stops above this 30-minute candle high. If we come up here, but unlikely. Unlikely. So we'll just have to wait for 30-minute support to form to take the buys going up. Okay, we got another 10 minutes. Okay, let's wait. Wait for the last 5 minutes of this candle, and then I will share a setup for today. Wait for the last 5 minutes of this candle. We have volume, 62 pip candle. So after this, after volume, price showed that we could have possible volume, 45 pip candle. Then price pushed down 62 pips. But now it's the NYSE open, so we're going to have a probably possible pullback and then a continuation down, and then later on form 30-minute support and push back up. That's what's going to happen. The 4-hour candle is likely to close bearish. It's likely to close bearish. We'll know that only in the last 15 minutes. We won't know now because price can push back up. Yeah, we have more room to come down. Price has to come down further. Yeah, it has to come down. But I want price to pull back a little bit more. Let's see, you can take sells here. If we come at least here, 40 pips. It's going to be a low RR sells because it's a counter trend trade. We formed 30-minute resistance. 15-minute candle has closed back below the London high. We can take sells. I'm going to take one here. The touch of that, 2910. One sell there. If we come up here, I'll take another one. 2905. 2905. I've explained why I'm taking these sells very clearly. Um, yeah, come up a bit more. Take another one. It's about 50 pips. Yeah, we tap this. Okay, that's it. That's it. Anticipating this candle to close bearish. That's one of the reasons for to take the sells. Anticipating price to close bearish. This 30-minute candle to close bearish below the London high, and the next one to continue down to 2905, at least to 2905. Yeah, about 75, 80 pips. The reason for is 30-minute resistance formed. Uh, there was no 30-minute close below this, but there was a clear 15-minute close below the London high. Again, I said this is a counter trend trade. It's a risky trade, and the sells are going to be short-lived, right? Because the bias is up, but price needs to grab liquidity to head up to break this liquidity candle. It is going to break it. This candle has this candle has no top wick, and we are going to break this. Once you break it, we're heading up there. So the stops are obviously above 2916. That's exactly where the stop loss is, 2916. The 4-hour candle, let's see, it's too early to say how the 4-hour candle is going to close. But the 30-minute candle should close below the London high. This candle should close below this. So the next one should pull back and continue down. So the 15-minute candle needs to close below for the 30-minute candle to close bearish and to close below this, right? Makes sense? The 15-minute candle, 2 minutes for the 15-minute candle to close. It has to close below this white line, below this high here. The high is 2911.5 roughly. It has to close below 2911.5. Now this is a risky trade, counter trend trade. So we've got to manage risk, and it's one way to manage risk, aggressively to manage risk, is to close maybe a position if the high breaks, if the 30-minute candle breaks its own high, or the next candle breaks its 30-minute candle high, 1382. Yeah, that's a 30-minute candle high. I want to see this 15-minute candle close below the London high, below this, for price to probably then push back up, grab liquidity, and then head down. Because if the 30-minute candle closes bearish below the London high, then the next one should push down, fill the wick, and then the one after that might form 30-minute support, right? But the whole idea is for the next candle, this candle is going to close right now, the next one to push down, because we're closing below the we should close below the London high, for the next one to continue to push down and fill this wick. Yeah, there we go, closed just below. You can see closed at the bearish candle, 30-minute bearish candle close at the London high. 15-minute candle has pulled back. This one is very likely going to break this high. Very likely going to break this high, come up here. Let's see how far it comes up. If it comes here to this 2914 and then reacts. I'm going to watch the lower time frame, maybe the 5-minute, to see if you have a reaction at 2914. But we're going to break the 15-minute high, which we have. We've already broken the 15-minute high. In the first minute, we broke the high. So we should continue down. Signs are that we should continue down, but we might tap 2914 first. 2914. Yeah. It's got a pending order there. I'm going to wait for the 5-minute candle to close. I want to see how this candle closes. This is the NYSE open. Yeah, oh, I've been here a couple of hours. Okay, so that's it. I'm going to end the stream now. The trade idea for the day are buys, not sells. I've taken sells here. I said the sells are going to be short-lived. These sells are very aggressive. It's a counter trend trade. And the way I'm going to manage risk is if we break above 2913.8, I'll close one of my positions. If we come up here and break 2916, then I'm closing everything, right? But the 30-minute candle has closed below the London high. So this one should push down and fill this wick. And the reason I did take the trade is there's a liquidity candle, 30-minute resistance has formed, and the 15-minute candle closed below the London high. That's the reason. Those are 3 reasons why I took the sells. But the sells are going to be short-lived, I said. They're very likely going to create 30-minute support somewhere here. As soon as that 30-minute support forms, the trades are no longer valid. You've got to close them immediately, right? Because price is very bullish and we're pushing up. So the trade idea for the next 2 hours, hour and a half to 2 hours, is buys. Wait for 30-minute support to form, Wait for a 30-minute tradable candle, a 30-minute tradable bullish candle to close, and then take the buys to go up. The stop loss will be under the 30-minute candle low that created support, and your TP, your minimum TP would be around 2918, and then further up at around 2925, right? So 2918 and 2925, and then 2929. Yeah. Okay, so we are coming up. I'm going to probably manage risk here. All right. So sells are here. If we break, got triggered here, should manage risk. Let's see, wait for the, closing bullish, very bullish. It's a lot of bullish volume. Yeah, we got to close. Yeah, yeah, yeah. That's it. Done. All right. So I'll be back again next Tuesday, the 18th. Okay. So the sells, obviously, it was I said it's a very risky trade. We are pushing up. All right. See you guys next Tuesday. Have a great week. Stay safe.